Hello, everyone. This is Devin Thorpe for the CrowdFundBeat, and we are really excited to have with us today Benjamin Miller, the CEO and founder of FundRise, who just completed a $31 million venture round, one of the largest venture rounds of any crowdfunding site. Only, I think, Indiegogo and Kickstarter have raised more money than that. I don't know, Benjamin, you think there's a different number, but in any case, this is a big deal, and we're glad to have you here to talk about it.
Yeah, thank you for having me, Devin.
So, $31 million. I think that's a lot of money. Do you think that's a lot of money for the crowdfunding industry?
I mean, it's an endorsement of the power that crowdfunding can drive in real estate and every sector.
Yeah, it certainly is that. Well, tell us a little bit about the investors that you brought into this round. It's an interesting group.
Yeah. Well, so the lead investor was called Renren, and Renren is actually a Chinese social media company that's public on New York Stock Exchange, and they are the lead investor in a company called SoFi, or Social Finance, which is a student lending peer-to-peer crowdfunding site. And they invested in SoFi a couple years ago, had a very good experience. SoFi has successfully scaled to enormous heights. And from that experience, they decided to make another investment into the crowdfunding space, and this time real estate. And so that's our lead investor. We have a number of other investors as well, largely from the real estate sector, most notably the Silverstein Properties folks, who are the owner-developer of the World Trade Center, and I would say it's a top 3 real estate development company in the country. I would put on the top 3, and I'd say that the other 2 of the 3 on the list also invested in another one called the Renren family, which is Forest City. If you're in the real estate industry, you probably know about Forest City, and a bunch of other big real estate players. So we had a few tech guys. We had a bit of I tried to do a little bit of a version of crowdfunding. I think we have a good number of people, maybe 16 investors. Collaborative Fund, which is a big player in the peer-to-peer space or the collaborative space. Mm-hmm. And I mean, I feel very fortunate.
Well, Ben, did you put this round together using a platform? Or did you have it on AngelList or Gust or anything, or did you do this old school?
It was a relationship based. It was old school. We've thought about crowdfunding our round and using a platform, but the way it played out, because we weren't looking to raise money. We've talked to some venture funds, and Renren found us. Renren had looked at the whole space. They've been thinking about real estate as a vertical for crowdfunding or whatever you want to call it, peer-to-peer marketplace lending. And they actually showed them up at my office. I really did not know who they were. So
I lived in China for a year. I knew who they were. You could have called me. I could have told you.
Yeah, my brother. I partnered with my brother's co-founder, with a few of us are co-founders here, and so he was a little more to it. And so so we were not actively fundraising. They found us. And they have been a remarkable partner.
That's great. Well, what do they see as being the strategic fit for their social media and real estate? What's the connection for them?
I'm not sure they see it necessarily as part of their core strategy. I mean, their business is in China, and I think they saw it more as sort of like SoFi investment as opportunistic. It made sense to them, but I can't speak to their strategy as well as I can speak to ours.
Well, tell me a little bit about what you think. Your sales pitch. You closed the rounds. Why are people investing in FundRise? Yeah,
I mean it's interesting because 3 or 4 years ago I think we were the first real estate crowdfunding site by a couple of years. When we first started it, people thought it was just crazy. The idea of crowdfunding, I mean, it wasn't even called crowdfunding when Daniel and us over here first did this round. I think we called it syndication. If you're familiar with that word, it means to raise money for real estate. You can syndicate a loan or equity. And so we were, I think, at an online investment platform. And the idea that you could have hundreds or thousands of people invested in a single real estate property directly on the internet at $100 a share was, any real estate guy used to tell us we were crazy. That's nuts. That's a terrible idea. And then a year or two later, people started telling us that it was kind of novel, it's sort of smart, it's very interesting. And then about 6 months ago, maybe it was somewhere in the last 12 months, it's a little blurry, I work a lot, it became just the bell rang. And everybody started thinking about it, everybody talking about it. Oh, it's so obvious, this is what should happen. And during that, I think that Lending Club's success scaling, in particular, made people focus on this. The Jobs Act, which even though it happened a while ago, takes a long time to penetrate the sort of like general consciousness of what this could mean for industry by industry. And so, and if real estate is, I think it's about the same size as the entire stock market. So it's like maybe a $6 to $10 trillion market. It functions offline like crowdfunding. I mean, if I've ever raised money for a real estate deal, and I've raised money for a few, there's a lot of parallels in how you do the fundraising process, especially if you do it from high net worth investors or friends and family rather than institutional. So there's a lot of logic to bring it online, and I think finally people realize. I mean, we've been talking about it for years. And then at some point, people just started saying, I mean, the industry got bigger than us. I mean, by far. Now it's like its own thing. It's become something that major real estate companies are considering.
Ben, what is the focus of FundRise? What's your model? Help us understand what people just invested in.
Yeah, I mean, we come from a real estate background. I spent. This is going to make me seem old, but 17 years ago.
Not when you're talking to me.
Yeah, I know. So, but I mean, this is tech space, so people are 20 years old and billionaire real tech guys. But 17 years ago was my first real estate job. I was a real estate private equity fund, and so I've basically been in real estate for a while. And my experience in real estate and my network and so the guys here. And the women here, we really bring a strong point of view about what ought to be crowdfunded and where would I want to invest my money, and it's just the best real estate. It's all about quality. I've been through 2 cycles in real estate. We've developed a couple million square feet of real estate. I mean, we own a couple million square feet of real estate. I mean, one of the things I find in crowdfunding, everybody makes these really outlandish statements about how much they've done, $1 billion here, $1 billion there. So they just touch a transaction, and but if you've really owned and developed real estate, you understand that quality is where the long-term viability. It weathers. We weathered 08, weathered 01, and so we think that it's all about quality. That's why we went and got Silverstein and Renren and these big real estate players on FundRise, because if you invest in real estate, you'll see that the best place to put your capital is quality. Now, there's a different point of view, and there's a more Silicon Valley mentality, which is basically do anything and everything, and there's definitely a good argument for that, and I think that someone will be able to make a lot of hay with that, but that's not how we are approaching it.
Now, I think I've read that you are hoping to ultimately have your business operate for both accredited and non-accredited investors, and perhaps there's some places where you're already able to do that. But by and large, I presume you're operating with mostly accredited investors. How's that playing out?
Yeah, I mean, we've done both. We've gone through the SEC. We've done 3. I mean, you call them basically local public offerings with the SEC, or I think they're also called direct public offerings. And that's basically where the SEC. I mean, it's almost as onerous as a real public offering, which is why doing 3 in a couple of years was just crazy. And in retrospect, I'm like, well, that's just, what was I thinking? because the process is extremely intensive, 9 months, 6 months. One of our filings was 25 pounds of paper.
Oh my gosh.
Yeah, 25 pounds. And I know it's 25 pounds because we had to FedEx it. We have pictures of it all on the scale. So we have been doing unaccredited raises. We started with unaccredited. I mean, and I see the logic of doing accredited raises, because if you're raising money from accredited investors under Regulation D, there's a very light regulatory burden, and so it's fairly easy to do. I mean, basically anybody with a web developer and a broker can start real estate crowdfunding, but there's not that much magic in it. From my point of view, I think that the real magic and power is when everybody can do it, and that's, as a real estate person, been raising money for high net worth investors for decades. And what's the big deal? I mean, putting it online has some advantages, but I think that you'll see, and we've seen, because we've done it. I mean, it's not theoretical. I mean, I literally have 1,000. My real estate company has 1,000 investors at $100 a share. They're unaccredited and accredited, and I know exactly what it means to have them. From what's the administrative burden? What does it mean from a transparency and communications point of view? This is not something I'm telling people to do because I think it's like a good idea. It's something I'm doing because I know it's a good idea. I've done it, and I think that's distinct from most of the people in the space. Most people who are doing crowdfunding. And we'll see as it plays out if that is the regulations are the barrier to scaling that today, and I think they'll remain the barrier with the way that the regulations are proposed under Title III of the Jobs Act.
Yeah. Well, Ben, I want to talk just a little bit, drill down on this notion of how the deals are working just a little bit, because there are different ways to do a deal. So are the projects essentially on your side, are they FundRise projects or third-party projects?
Yeah, so in the beginning they were just FundRise, our own projects. They're actually not FundRise even. It was our real estate company. That was about three years ago, and 2 years ago. About a year and a half ago, we started to become an open platform, and I think we have, I don't know how many, 300 or 500 real estate companies on the platform now. We do about 1 or 2 deals a week, and we don't do our own real estate deals anymore because we just don't have the bandwidth. You really can't do more than one thing well, so we've focused on FundRise. As you might imagine, when you raise a lot of money, you have a mandate from your investors to focus on what they invested in. So we don't do any more of our own real estate, which I've sometimes missed, but yeah. I get to be in a lot of deals now. That is for sure.
That's good. That's good. So are you taking a piece of every deal as part of your fee structure, or are you investing your own money personally? Are you investing FundRise money in each deal? How are you participating?
The way it works right now is that a developer may come to us. They're looking for whatever, let's say $1 million or $5 million. Usually it's, let's say, less than $5 million. And we'll invest. The crowd will be a part of the investment. Typically, the crowd isn't that much money. I mean, you're only talking about $500,000, million, sometimes $1.5 million. It's not a lot in real estate. So you need to basically couple it with other sources. So we usually bring the majority of the capital from our own capital source, and then really bring the crowd in as a complement. And that's something that's a little different. It's more capital intensive, but I think you need to do that if you're going to get good economic terms from the real estate deal.
Sure. Well, Ben, I really appreciate you taking the time to be with us today. To wrap up, tell us who you would like to have reach out to you and how they can best connect with you on the website or wherever else.
I mean, we're looking for people who are passionate about building places. I mean, there could be an investor, it could be a real estate developer. The whole idea of FundRise is that when you end up with thousands, tens of, whatever, millions of people investing in real estate, it changes the built environment. It changes how people think about their environment when they own their environment. And that's the big idea. Big idea is, what happens when you look around your neighborhood and you are actually the one building it.
Right. Well, Ben, thank you very much for taking the time to be here today. Your website is fundrise.com, right?
Yes.
All righty. Well, Ben, thank you. Again, I appreciate your time. It's great to hear from you, and I congratulate you on completing that huge venture round.
Thank you, Devin.
All righty. Let's do some good.